Best tip: to invest in cryptocurrency. The world of finance has been undergoing a seismic shift, catalyzed by the emergence of cryptocurrencies. These digital assets, built upon the revolutionary technology of blockchain, have not only captured the imagination of tech enthusiasts, but also enticed investors seeking substantial returns. However, the path to successful cryptocurrency investing is fraught with complexity and risk. In this extensive guide, we delve deep into the intricacies of the cryptocurrency investment landscape, equipping you with a comprehensive array of strategies to navigate this intricate terrain. From understanding the bedrock principles that underpin cryptocurrencies to mastering advanced techniques, we unveil the best practices to consider when investing in cryptocurrency, enabling you to position yourself for potential success in a volatile yet captivating ecosystem. 6. The foundation of cryptocurrency investing. Education is paramount. Venturing into the realm of cryptocurrency investing without a strong foundation of knowledge is akin to setting sail without navigation. Before embarking on this journey, it is essential to invest time in educating yourself about the fundamental concepts of cryptocurrencies, blockchain technology, and the mechanics of the digital assets you intend to invest in. By cultivating a deep understanding, you empower yourself to make informed decisions in a landscape marked by rapid innovation and evolving dynamics. Diversification as a shield. Just as a prudent sailor navigates treacherous waters with a diverse crew, a successful cryptocurrency investor approaches the market with a diversified portfolio. Diversification is not merely a strategy, it is a risk mitigation technique. By investing in a variety of cryptocurrencies, you spread your risk across different projects, thereby reducing the potential impact of a single coin's poor performance on your overall portfolio. 5. Crafting an effective investment strategy. Long-term versus short-term investment. Cryptocurrency investment strategies can be broadly categorized into long-term and short-term approaches. Long-term investors believe in the long-lasting potential of specific cryptocurrencies and are willing to hold their investments through market cycles, anticipating substantial growth over time. In contrast, short-term traders, akin to day traders in traditional markets, seek to capitalize on short-term price fluctuations, aiming for quick profits. Deciding which strategy aligns with your goals and risk tolerance is a critical step. Fundamental analysis, research, and evaluation. Cryptocurrency projects are often built upon ambitious visions, aiming to revolutionize industries and reshape traditional systems. Performing thorough fundamental analysis involves scrutinizing the project's white paper, understanding its underlying technology, evaluating the team's expertise, assessing partnerships, and gauging the potential for real-world adoption. This research-intensive process enables you to separate promising projects from potential scams, forming the bedrock of your investment decisions. Technical analysis, charts and indicators. Technical analysis involves studying price charts and applying various indicators to predict future price movements. While contentious among investors, technical analysis can provide insights into market sentiment, trends, and potential entry and exit points. Learning to interpret charts and indicators can be a valuable tool in your investment toolkit, though it requires practice and a critical eye. 4. Advanced strategies for cryptocurrency investing. Staking and yield farming. The advent of blockchain technology has introduced novel ways to earn passive income through your cryptocurrency holdings. Staking involves holding a specific cryptocurrency in a wallet to support network operations and earn rewards. Yield farming, a more complex strategy, involves providing liquidity to decentralized finance, DeFi protocols in exchange for yields. These strategies require a deep understanding of the platforms and protocols involved, as well as an awareness of the associated risks. Participating in initial coin offerings, ICOs, and initial exchange offerings, IDOs. Initial coin offerings, ICOs, and initial exchange offerings, IDOs, are fundraising methods where new cryptocurrencies are offered to the public. These events can present lucrative opportunities, but they also carry significant risks. The lack of regulation in this space means that scams are prevalent. Swing trading and day trading. For those inclined towards active trading, strategies like swing trading and day trading can offer opportunities for profit. Swing trading involves capitalizing on short to medium-term price fluctuations. Day trading, on the other hand, entails executing multiple trades within a single day. Both strategies require substantial knowledge, experience, discipline, and the ability to manage emotions amidst rapid market movements. 3. Navigating challenges and staying secure. Security measures. Safeguarding your investments against cyber threats is of paramount importance. Due to the irreversible nature of cryptocurrency transactions, once lost, funds are often irrecoverable. Use secure wallets. Consider hardware wallets for cold storage, and enable two-factor authentication to protect your accounts from unauthorized access. Additionally, avoid storing large amounts of cryptocurrency on exchanges, as they are vulnerable to hacks. Avoiding FOMO and FUD. The emotional roller coaster of the cryptocurrency market can be intense, leading to impulsive decisions driven by fear of missing out, FOMO, or fear, uncertainty, and doubt, FUD. FOMO can cause you to invest in a rising asset without proper research, while FUD can lead to panic selling during market downturns. Staying grounded, rational, and objective is crucial in making sound investment choices. 2. Regulatory awareness and legal considerations. Regulatory landscape. Cryptocurrency regulations vary widely across different countries and jurisdictions. Before investing, it's crucial to understand the legal status of cryptocurrencies in your country, as well as any tax implications that may arise from trading or holding digital assets. Regulatory changes can have a significant impact on the value and legality of certain cryptocurrencies. Tax implications. Cryptocurrency transactions, including buying, selling, and trading, can have tax implications. Some countries treat cryptocurrencies as property subject to capital gains tax, while others consider them as commodities or even currencies. Consulting a tax professional who specializes in cryptocurrency can help you navigate the complex web of tax regulations and ensure you comply with reporting requirements. 1. Evolving trends and future outlook. Emerging technologies. The cryptocurrency landscape is dynamic and constantly evolving. Beyond just investing in individual cryptocurrencies, it's crucial to keep an eye on emerging technologies that have the potential to reshape the entire industry. Concepts such as blockchain interoperability, decentralized finance, DeFi, non-fungible tokens, NFTs, and more can have profound implications on the market as a whole. Institutional adoption. The involvement of institutional players, including banks, investment firms, and corporations, is significantly shaping the cryptocurrency market. Institutional adoption can lead to increased liquidity, decreased volatility, and the integration of digital assets into traditional financial systems. Keeping a watchful eye on developments involving institutional investors is vital for understanding potential market trends. In the exhilarating world of cryptocurrency investing, the potential for substantial gains is rivaled only by the complexity and risk inherent in this dynamic landscape. By laying a strong educational foundation, crafting a well-researched investment strategy, staying vigilant about security and regulatory considerations, and remaining adaptable to evolving trends, you can navigate the cryptocurrency market with increased confidence. However, it's important to remember that no investment strategy is foolproof. So guys, let me know your thoughts in the comments section below. For more interesting content, give this video a thumbs up, and don't forget to subscribe to the channel for more awesome content. Have a nice day, and I will see you in the next video.